Thank you so much for the invitation to discuss Catalin's excellent book on informal debt collection in Europe. Um, just a few words about myself. I'm a political economist of finance who usually works at the macro level of analysis. So my reflections will dwell upon that specific level. And before I get into the details, let me say how thoroughly I enjoy this book. It's written in the sort of intersection between an interdisciplinary social science and, as odd it might sound for some, as a legal thriller in many ways. Looking at the ways in which something as systemic as a 1.3 trillion euro problem in the aftermath of the European financial crisis has been addressed by a wide array of actors in ways that have sacrificed consumer rights over financial stability issues. So for me, this is a particular blind spot. I usually work on ECB monetary policy, European Commission financial regulation. This was a huge problem and a core aspect of the European financial crisis. It was the channel through which the crisis manifested itself. And most of my field has been spending time on the consequences of issues of private debt settlement for international sovereign debt settlement. So I'm very grateful for Catalin for bringing to the fore this kind of like micro level analysis of the consequences of the crisis for ordinary folks across the member states. So I will start by saying that on the merits, that the book came to me as a sort of return to a kind of perennial issue in capitalism, and particularly to my sort of earliest interest in the topic back when I was a teenager in late 1980s Romania. And one of the kind of countercultural books at the time in my milieu was the Comédie humaine of Honoré de Balzac, which has opened the gates for me in a sort of an interest in the psychological, sociological aspects of capitalism. I ended up not studying that particular area, dwelling more on the macro. But Catalin brought me back there, and he brought me back there through an interdisciplinary analysis where macro level actors like the European Central Bank and the Commission intersect with a bunch of actors that come from these rather unsavory and not altogether respectable parts of European bourgeois society, the debt collectors. So the debt collectors are a big deal in 19th century capitalism, as is the debtor's prison. Catalin reveals how those characters are not just some unsavory characters that one can write fun books about, but also they're a kind of systemic pillar of the way in which modern European finance works, and even of how the European Central Bank kind of organizes its financial stability mandate. So in that sense, I've read the book as a thriller that brings together Balzac and the thriller of regulation inside the corridors of power in Brussels and Frankfurt. Now, my reading of the book as a political economist of finance, rather than as a reader of Balzac in this case, I see this book as an account of how the structural and the instrumental power of financial capital manifests itself. And what's interesting in Catalin's book is that the emergence of these debt collecting agents as an organized form of market actors is relatively new, right? I mean, there's a lot of market concentration with Swedish and German actors at the top. But they don't yet have structural power in the sense that they have to lobby. They have to lobby to project their interests, to make their interests manifest, and then to tie them to the organizational interests of regulatory actors, in this case, the Commission, and of critical pillars of EU policy, such as the European Central Bank. So in that sense, what we see here is a new actor that emerges from the kind of catastrophic levels of non-performing loans in the aftermath of the crisis, that needs this instrumental lobbying power in order to lock itself into the devices of EU macroeconomic power, but then in the process develops what Benjamin Brown, building on Mann's work, has called infrastructural power. In the sense that just like commercial banks and pension funds and other institutional investors become essential for enabling the ECB to carry out its monetary policy through the collateral window and other such instruments. In this case, the debt collection agents become an instrument of a massive reduction of this non-performing loan rate, perhaps the single most threatening challenge to monetary policy back in 2015 to rather negligible levels later on. Now, this in turn has given these actors the power to project infrastructural power, in the sense that the ECB needs them to fulfill its mandate or its emerging mandate of financial stability. It is a mandate that was born out of a great deal of organizational and political struggle, the mandate of the bank, of the European Central Bank. And this is where I would perhaps invite a conversation that goes beyond the book. Therefore, the financial stability mandate was something that was forged in the battles over what the ECB is about, that took place between 2010 and 2012, more or less. And then the consensus that emerged from that debate was that the European Central Bank should not be just as a sort of a manager of an inflation target, but rather as a guarantor of the financial stability of the European financial sector itself. Now, if you acquire that mandate, and this is Draghi's famous whatever it takes, right? I mean, the guaranteeing of the effectively of the balance sheets of the banks in the euro system, and with that of the sovereign debt of the member states that had been extremely destabilized by European sovereign debt crisis, then you need these unsavory characters to be protected against consumer campaigns asking for more transparency about how much money they're making and about their data. But then you may want to turn a blind eye, because at the end of the day, what emerges from Catalin's story is that there is a very clear hierarchy. There's a clear hierarchy between financial stability as the secondary mandate that emerges from that battle in EU governance, and effectively citizens' rights. One of the most liberal of rights, which is consumer rights. So in that sense, there is sort of like macro liberal level of protection. That is the protection of the stability of the shareholding class. By which we mean not just the billionaire class, but also pensioners across the continent, over the assertion of consumer rights, demanding protection from European institutions and not getting it, because at the end of the day, and now I'm asking Catalin perhaps to reflect a bit more on a kind of not an legal and psychological analysis, but a political economy, organizational analysis, um, in which the line taken by many would be that would where the buck stops with the ECB, right? In particular, the European Commission story is a completely different one. But with the ECB itself, an area that I know quite well, the buck stops with the ECB making a very clear hierarchy in the mandate and saying, at the end of the day, we will throw the European consumer down the stairs because the harm produced by European financial instability is much greater than the harm produced to, the millions of lives whose rights as consumers have been trampled by these weird people driving funeral cars around Spain and using kind of medieval sort of shaming mechanisms. So this is very weird cohabitation between this kind of 21st century central banking with its very, complicated infrastructural and structural mechanisms and its calculative devices on the one hand, and this kind of like morality tale of the let's say the cleaning dogs of the system, the useful zombies that go out there and hunt people out, and playing a role in essentially helping the ECB carry out its financial stability function through the various medieval moral tortures and legal tortures and real costs incurred on European consumers. So I would say, just to summarize, perhaps to Ehrlich and Romer's account, one could also counterpose a sort of bread and butter political economy of international organizations, right? Which is the political economy of mandate. It's the political economy of whose interests are safeguarded first within that mandate. For the ECB, it is the interests of the shareholding class, effectively, and they would argue of the entire downstream economic ecosystem that benefits from financial stability, and the ECB would say the consumers themselves, right? Because consumers would suffer even more from not letting the NPL rate go down dramatically, and ECB being happy that it's taken off the balance sheets of banks, and it's like now the problem of consumers or of those that have securitized that debt and sold it downstream. Now, how big of a business it is? I mean, some of the numbers that Catalin brings out: 75 billion between 12 and 24, so roughly 5 or 6 billion a year. I mean, it's not a big business. So the irony here is that the ECB is getting a lot of bang for the buck. So if one just looks at the matter from inside the corridors or the boardrooms of the European Central Bank, this is a pretty effective, pretty low-cost, effective exercise for taking care of a 1.5 trillion euro problem that ECB had on its hands. I would like to see a follow-up to this book by looking at how other central banks outside of the Eurosystem, perhaps the Fed, have dealt with this problem. Particularly in the American market, where consumer debt is even more prevalent. And let me move on to the next topic, which I'm writing a book on industrial policy today, and I find in general that European Union is much worse than many Asian countries at creating its own industrial champions, very large firms that come out of nowhere and become systemic. But it seems to me that we are very good at creating debt-collecting champions. It's not industrial champions. And I mean, this tells us a lot about how underappreciated sometimes the financialization of European life in Europe has been, particularly since the financial crisis, from which we seem to have learned very little. But it does create an unavoidably almost comical contrast between the weakness of European industrial policy at EU level in creating such industrial champions and help Europe stand on its feet, especially when faced with competition from other powers. On the one hand, and its fantastic ability to generate new, in this case, or emerging financial champions. I mean, I would say from now on, it's going to be impossible to write about political economy and finance in my field without looking at FENCA, the Federation of the Debt Collectors. I found the coverage of this new actor particularly compelling and very useful for me, and especially in terms of how they manifest their power, not just through lobbying, but by carrying out these surveys at the national level. So translating that into a form of knowledge power, and particularly in the ways in which they have instrumentalized their lobbying, their instrumental power with the European institutions, the ECB and the EC in particular. I mean, of course, on moral normative terms, it's indefensible, the fact that these actors are allowed to exist in a space of complete obscurity, the fact that although legal theory tells us there should be much more explicitness and precision in the legal instruments they are being provided with, debt collectors are being provided with a protection racket in the form of the opposite, right? For reasons that one can understand organizationally, as I stated previously, but in that sense, just like in the financial crisis, we've learned about the systemic role of shadow banking, right? And the fact that often insurance companies or asset management firms are more important than the banks themselves, right? The fact that we live in a sort of post-banking financial sector. Likewise, through Catalin's book, we're learning that we can think of executing financial stability mandates and regulation without involving this particularly obscure, an analysis of this particularly obscure, untransparent, highly protected, sort of morally indefensible, undefensible sort of body with such crazy practices. One thing I would add here is, as a follow-up, I would love to see a study on how these practices are being transformed by fintech. I mean, I'm thinking here of Klarna and other such financiers emerging through the marriage of finance and information technology, whose debt collecting system is quite usurious and preying on financial newbies in quite dramatic ways, and then kind of selling themselves on this often lionized emerging tech sort of market. I like very much Chapter 7 on the European Central Bank. Again, the story there, I would kind of have a parallel narrative of the political economy of organizational ranking of mandates that could, rather than undermine the case that Catalin makes, could actually kind of lend it a broader relevance to theories in European Union studies, and particularly how mandates versus growth coalitions versus intergovernmental bargaining versus supranational bureaucratic politics intersect with each other and run against each other. Particularly, I think what I missed in the book was more of more emphasis on the intergovernmental bargaining that led to the adoption of various directives and how they were transposed. We know that behind each of those directives lies, even for the ECB monetary policy, ECB is an independent, like all central banks. They're independent in name. There's a lot of politics going on in the board, and for the ECB, for the European Commission, there's a lot of debate and pressure going on at the intergovernmental level, European Council. So to what extent, I wonder, countries that had more of an NPL problem had a different position than countries that had a very strong NPL problem. To what extent, countries that have financial centers, like, Germany, France to some extent, Luxembourg, in venture capital, Stockholm, Sweden, they upheld different positions as member states, and often perhaps some of them aligned with the debt collectors, and some of them in tension with them. Right? I mean, I think that chapter was, to me at least, invites an opportunity to rethink how EU studies needs to be organized intellectually to speak to the very specific aspect that Catalin addresses here, which is how does an emerging actor operating in a rather obscure but highly useful market gets supported or obstructed by member states in the intergovernmental space of regulation in Brussels in ways that align or do not align with particular national growth models, degrees of financialization, degrees of vulnerability to NPL. I also like chapter 13 very much. And I mean, I don't have many comments on this. It's just that I was just completely dumbfounded by what a viper's nest this space is, and how the ECJ ruling basically exposed a lot of the absolute insanity that's taking place there. I mean, in many ways we do live in a debtor's prison, although it's the kind of post-prison, but still, highly moralized, coercive space. If you find yourself in that universe of people with, responsible for the non-performing loans, whether as individual or as businesses. The fake funeral cars in particular. I mean, when I did my dissertation in fieldwork in Spain, I do remember that being. I mean, it was one of the highlights of Spanish politics. It was the hounding of the debtors and the evacuation, of those who defaulted on their mortgages in an economy that had been subject to a lot of predatory lending before the crisis. So a plain failure, that whose puzzle Catalin masterfully reveals, made me think, as somebody who comes from outside of the field of the legal study of European interventions and of this particular market. I mean, I wish I had time to do some of this myself. Developing some of the macro level dynamics I have laid out earlier on. So thank you again, and really bummed I cannot be there to hear the debate, but we'll probably catch up for dinner. Thank you.